The rate at which prices are rising is set to fall this year. That's not the same as prices themselves falling, it just means they'll be rising less quickly, but still much faster than the Bank of England's target rate of around 2% a year. Inflation in the UK fell to 3.2% in March from its peak of 11% in 2022. Unfortunately, the sharp rise in prices will not be reversed, leaving most people in the UK worse off, no matter how low the rates of inflation and interest fall. Interest rates are a major tool used by the Bank of England and other central banks to influence inflation, among other things. The base interest rate set by the Bank of England is currently 5.25%, way higher than it was between 2009 and 2021, but this rate is more normal when you look back over several decades. The relatively recent low rates were implemented to help the economy recover from the financial crisis of 2007 and 2009, and yes, we're still dealing with the fallout from that. Anywho, the UK's base interest rate might nudge to below 5% towards the end of the year, but don't expect any sharp changes unless the UK economy hits even bigger problems than it already has. The higher interest rates of recent months have nudged up the returns that bonds pay. Bond issuers, governments and companies, effectively compete with savings accounts to persuade investors to buy their bonds. The higher the interest rate, the more attractive the savings account, therefore the higher the return the bond has to offer to persuade investors to buy those bonds instead of just putting their money into a savings account. Meanwhile, the really big investors, banks, insurance and pensions companies with billions of pounds and dollars to invest, have been getting excited about the prospect of lower interest rates leading to lower debt payments for everyone, companies and people alike, and therefore higher profit margins for companies, which in turn lead to higher share prices. This optimism has helped to push share prices up. Company share prices in the UK, as measured by the FTSE All-Share Index, are at their highest ever level. My portfolios are designed to follow what's going on in the global investment markets, share prices and bond prices and so on, while keeping fees and charges at the absolute minimum, generally around 90% cheaper than most banks and investment companies charge. As a result of the increased hope for lower interest rates, my example portfolio, and there's a link to that in the description, has risen by around 11% after fees and costs in less than a year. It was even higher earlier this year, but, as expected, the prices of the funds in which my portfolio is invested came down a bit. There are three important things to bear in mind about this. 1. The rises or falls don't reflect my skills or lack of them. I just set up the portfolio copying big companies' research, but using funds that charge much, much lower fees. 2. I expect prices to fall and rise and not just to go ever upwards. That simply doesn't happen. And 3. The rise was so high, way above the long-term benchmark of around 6% a year, that it simply had to come down. I'm in the process of setting up new portfolios to demonstrate a broader range of risk levels and amounts to invest. I'm also going to rebalance my existing portfolio as it's been a year since I set it up, so I want to make sure that it's on track and continuing to copy the relevant model portfolio. I'll create a video of that and share the link once I've done it. Click subscribe if you'd like to see how I do that without relying on expensive banks and investment companies. WTF, what's the fact? Teenagers are up in arms and stuff because TikTok is under threat in the US. Yes, the simplest way to burn your young life might be literally like Delta Blow because the US government objects to China's part ownership of this totes Gucci digital medium. Back in my day, we had the choice of upper crust BBC types showing us how to make tinsel-covered coat hanger house fire starters, ideal for insurance claims, Alternatively, when you really wanted to see how much worse your life as a child could be, you could watch a bunch of brats with regional accents asking, "Why don't you?" before they emphatically demonstrated precisely why you don't, by showing a series of kids most likely to be bullied at school doing anything from handbell ringing to creating innovative new recipes such as a cheese and ham sandwich. If you must waste your time by staring at a screen, a bit like now, you can do no better than this excellent rendition of Danny Boy by the Muppet Trio of Swedish Chef, Animal and Beaker, aka the Leprechaun Brothers. It's sick, lit, goat.